Hey everyone, welcome back to our YouTube channel Learn with Sahira. In this video, we are going to see the complete and clear explanation of unit number 5 from the subject Business Economics, which is for degree 5th semester Bcom students. By watching this video, definitely you will be perfect with unit number 5. If you didn't watch our videos on unit number 1, 2, 3, 4 explanations, go to our channel playlist Business Economics Semester 5. You will be finding all unit explanations. So was that videos? It will be helpful for you. Was this video to get perfect with unit number 5? Was the video till end? And if you're new to our YouTube channel Learn with Sahira, subscribe it for more videos and don't forget to share this video with your friends too. Subscribe our channel ma, because on this channel you will be getting all the videos related to your exam preparation. Alright students, let us get started. So the first topic or the first question is, what do you mean by cost? Explain the different types of costs. One of the most important question it is. Sorry. Yeah, so whenever business produces anything ma, whether it is shoes, cakes, mobiles or services, any kind of product, it has to spend some money, right? And that spending is called as cost. Example, I will be having a company to produce chocolates. Okay, I have a company to produce chocolates. So in order to produce the chocolates, I need a place, I need a company, I need different machines, I need labor who will work there, I need raw materials, right? So all these cannot be taken in free, right? We need to spend some amount, and that amount is nothing but cost. Okay, so cost simply means the total money a firm uses for production. Okay, ये वो सारा पैसा होता है जो एक फर्म अपने प्रोडक्ट बनाने के लिए खर्चा करता है. Okay, like on raw material or worker salaries or electricity and fuel, rent, repairs. Already I have given you the examples, right? So a business must know its cost, because only then it can fix the right price, calculate profit, plan the future and control waste. Okay, so we are having different types of cost. What are the different types of cost? Let us understand one by one. So first one is fixed cost. Fixed cost means the cost that does not change even if we produce more or less. Fixed cost. I think you people have come across this word previously also, right? See, when it is rent of a shop, or when it is manager's salary, or it can be license fees or insurance or rent of the building, these all are fixed cost. It will not change, like it will not increase or it will not decrease when we are producing more or less. So this cost doesn't change ma. Rent of the building will be same, right? And manager's salary will also be same, watchman salary will also be same. They will not care whether the production is being more or less. So when we have more production, it is not like we need more fixed cost. When we have less production, it is not like fixed cost will change. No, it will not change. Then we are having variable cost. Variable cost change according to the production. Here, according to the production, the cost will not change. Here, according to the production, the cost will change. Like if we are making more chocolates, okay, my chocolate company produces 10,000 chocolates per day, you just assume. But when I want to increase my production, like when I want to make 20,000 of chocolates per day, I need to increase the raw materials, right? I need to increase packaging material or fuel used in machines or wages for casual workers, right? So here, if I want to make a change in the production, if I want to increase or decrease the production, I need to change my input cost, which is nothing but variable cost. It changes as per the production. Then we have total cost. Total cost is very simple. Total cost means fixed cost plus variable cost. Here we have seen fixed cost and variable cost separately, right? When we are adding both fixed as well as variable cost, we will be getting our total cost. Like FC, if fixed cost is 8,000 and variable cost is 6,000, when we add both these, we will be getting 14,000. That is nothing but your total cost. Getting my point? Now average cost, ma, it is also as simple as that. Average cost tells us that cost of producing one single unit. Okay, like if we do total cost divided by output, what production we are getting, we will be getting the cost of producing one unit. Like total cost is 200 units, ma, which is equals to 10,000. If we divide 10,000 with the 200 units, we will be getting 50 per one unit. We are producing 200 units, but we don't know the amount of single unit, right? So we will be dividing it. You will be doing it in the accounts. You have done it in the accounts. Okay. Then we have marginal cost. Marginal cost means change in total cost divided by change in output. Okay, this is the cost of producing one extra unit. If we are producing one extra unit, what will be the amount? It will be said. Then direct to cost, these are the costs directly used in making a product, like fabric for shirts, sugar in sweets, timber in tables. Without these, the product cannot be made. Like if I am making, if in my company I am making or manufacturing chocolates, it is necessary that cocoa should be there, right? Chocolate should be there. With cocoas only I can make the chocolate. Otherwise it is not possible. Like if I am making shirts in my cloth making company, if there is no fabric, can I make shirt? No, it is not possible. So here direct cost means the cost for the main specific product raw material. Like if I want to make a shirt, I need the fabric. Without fabric it is not possible. So direct cost is that. So indirect cost means these are common costs that help overall operations, like indirect can be office rent, or electricity, or rent of a building, security. These can be indirect costs. Opportunity cost, when we choose one option, we lose the benefit of another option. That is nothing but opportunity cost. Example, you see, if land can be used for building shops or a warehouse. Okay, if land is used to build shops instead of warehouse, you choose shops, right? Then warehouse. So what happened here? Warehouse profit becomes the opportunity cost. Like example, you're having fabric. Okay, you're having fabric. Now with that fabric, you can make a cloth, or you can make some different item. So in order to make the cloth, you will be leaving that making different product item. So here it is opportunity cost. We will be choosing the best option, in simple words we can say we will be between two options, we will be choosing the best option. Very easy in simple terms. Sunk cost, sunk cost means these are past costs that cannot be recovered. Okay, no matter what decision is taken in the present, these are the past costs or expenses that cannot be recovered, like money spent on outdated software or old machinery. Replacement cost, like a cost of buying a new asset when the old one becomes outdated or damaged. So it is used in long term planning and budgeting, social cost, social cost is a cost that society pays because of business, like pollution, traffic, or noise, waste. So these are the costs not paid by the firm but by the society. So it is not important only these 10 are important. If not 10, at least write 8. Okay, that is more than enough. So students, cost simply includes all expenses for production. Understanding cost helps business fix the right price plan and avoid losses. Okay, now let us have a look at long run cost curves and short run cost curves. So students, there are two types. Okay, when few curves will show how cost changes when output changes. Okay, अगर आउटपुट चेंज हो रहा तो कॉस्ट कैसे चेंज होता वो कर्व्स बताते हैं अपन को. टू टाइप्स है उसमें, लॉन्ग रन एज वेल एज शॉर्ट रन में. सो इन शॉर्ट रन some inputs are fixed, some inputs are fixed, and for example, see, you cannot suddenly change your factory building or big machines, right? It is not at all possible. They are fixed assets. So few things cannot be changed, but you can change labor, raw material. It means you cannot change your fixed materials, but you can change your variable costs. So here, because of this, we get different types of cost curves, and that cost curves are shown in two different forms. One is short run, one is long run. So in the short run, You can just have a look. Short run is the time period where at least one input is fixed. Okay, the firm cannot change factory size machinery, already we have seen. For example, a shop owner cannot shift to a bigger shop instantly but can hire extra workers. So here we see it in short run. So one is total cost ma. Total fixed cost, already we have seen it, like it remains the same at all the output levels, paid even when production is zero. Already in our previous sections, like in our previous unit explanations, we have clearly seen what is total fixed cost and total variable cost. That is why it is necessary for you to watch each and every unit explanation. In third unit we have seen this. Okay, total cost also we have seen, average cost also we have seen. Okay, it reduces as output increases. Okay, total cost. Then average variable cost also we have seen, right, in our previous class. So this third unit and this fifth unit are similar ma. You will just find a little difference in between of these. Okay, marginal cost also we have seen. So short run cost curve diagram you can see, you can have a look on the screen. Now let us talk about the long run short curve ma. In the long run all inputs are variables ma, like no fixed costs, no restrictions on plant size or full flexibility to expand or reduce production. Features you can just have a look on the screen. Now types ma, like long run total cost, it means total cost when everything is variable. Variable means what ma, already we have seen that it can be changed. Fixed means it cannot be changed. Variable means like workers can come or your raw materials can come, you can change them, right? According to your need you can change them. So it is that. Then we have long run average cost, it shows lowest possible cost at different output levels ma. It is formed by touching the minimum points of several short run curves. Okay, so economies of scale and diseconomies of scale, you just have a look. So curve diagram you can see, and relationship between both of them. Example you can see to understand the topic very well. Like a bakery has three choices ma: small oven, small output; medium oven, medium output; large oven, large output. So each one gives a different SRAC. Okay, so it is all about that difference. You can just have a look at the screen. If we talk about the conclusion, short run curves helps in daily decisions ma, and long run curves help in our future expansion or future decision making. As simple as that. Short run at present, long run means future. Now let us have a look at the third important topic, which is illustrate how to find out the break even point with the help of an example. So students, break even point means the point where the business earns no profit, no loss. There will be no profit for the business, there will be no loss for the business. Okay, it tells us minimum sales needed to avoid loss. ओके, यहाँ पे प्रॉफिट भी नहीं रहता माँ और लॉस भी नहीं रहता कंपनी को. बस अपन को लॉस से बचने के लिए मिनिमम कितने प्रोडक्ट सेल करने पड़ेंगे या तो कितने मिनिमम प्रोडक्ट्स अपन को बेचने पड़ेंगे वो अपन को मालूम होता ब्रेक इवन पॉइंट पे. मतलब लॉस भी नहीं रहता. बोलते ना, कुछ ना पाने से अच्छा कुछ पाने से अच्छा कुछ ना पाना सही रहता. मतलब लॉस होने से अच्छा या प्रॉफिट नहीं हुआ अभी तो लॉस भी नहीं होना, लेकिन अपन को जितने लगाए उतने आ जाना बोलने का मतलब. प्रॉफिट नहीं हुए तो नहीं हुआ लेकिन लॉस नहीं होना बोल के जब बोलते ना, जब बिजनेस ब्रेक इवन पॉइंट का यूज करती. इफ वी डोंट want the profit also, there should be no loss. At that time we take the help of break even point ma. Let us try to understand with a small example ma. Like imagine you start a juice stall. Okay, you bought a juicer and glasses for 1,000. This is the fixed cost because they are the materials, right? Not materials, you can say that they are fixed, they cannot be changed. Okay, each glass of juice costs 10 to make, so variable cost it is. You sell each glass for 20. Okay, 1,000 तो आप लोग जूसर और ग्लासेस पे लगा दिए. एक ग्लास ऑफ जूस बनाने के लिए 10 रुपीज पड़ते. ठीक है, ये वेरिएबल कॉस्ट है. लेकिन आप लोग क्या कर रहे हैं, 20 रुपीज को बेच रहे ताकि आपको कोई भी लॉस ना हो. ओके, यू वांट टू नो हाउ मेनी ग्लासेस यू मस्ट सेल टू रिकवर योर कॉस्ट. जितना भी आप लगाए उतना आपको वापस आ जाना माँ. बेसिकली अब किसी बिजनेस में आप 10,000 लगाए समझो, तो मेरे को 20,000 भी नको, मेरे को 10,000 से कम भी नको, मैं जितना लगे मेरे को उतना आना बोले तो ब्रेक इवन पॉइंट का अपन यूज करते माँ. सो फॉर्मूला आप स्क्रीन पर देख ही सकते हैं. Okay, example is also there. You just have a look. And steps we are having, find contribution per unit, selling price minus variable cost. अगर अपन मालूम करें तो अपन को contribution per unit, एक यूनिट पे अपन कितना खर्चा लगे अपन को मालूम होता. कैलकुलेट ब्रेक इवन पॉइंट में यूनिट्स आपको कैलकुलेट करना है. फिक्स्ड कॉस्ट डिवाइडेड बाय कंट्रीब्यूशन, इफ यू डू यू विल गेट इट. ओके, then you need to calculate the break even point. At 800 toys the company earns no profit and no loss. यहाँ पे टॉयज का एग्जाम्पल है ये, ठीक है. ये जो टॉयज थे एग्जाम्पल, ये इसका अपन, आप ये एग्जाम्पल भी अपने एग्जाम पेपर में लिख सकते हैं. जितना भी आप थियरी नहीं लिखना चाह रहे, इफ यू आर अनेबल टू राइट द थियरी यू कैन जस्ट राइट दिस एग्जाम्पल. ओके, फिक्स्ड कॉस्ट 40,000 है, एक सेलिंग प्राइस इसका 200 है, वेरिएबल कॉस्ट फाइन 150 तो पड़ रहे अपन को, लेकिन अपन 200 इसको बेच रहे. You can write, you can just have a look at the break even chart here. You need to draw this break even chart ma. Okay, importance, you just have a look. It decides minimum sales required, helps with profit planning, and it helps in cost control, fix selling price and all. Limitations, you can see it assumes price and cost remain constant. So this is one of the disadvantages, and assumes all output is sold ma, and it doesn't consider competition, not suitable for many product industries. Okay, so this is about this. Now let us have a look about the how to find out the break even point with the help of a chart ma. It is as similar to as this. If you understand the concept of break even point, whatever the question they ask you about break even point or break even analysis, anything you can write the same thing. Okay, so you can just have a look at the screen. Meaning of break even chart. What is the meaning of break even chart ma? A break-even chart is a graph that shows the relationship between cost, revenue, and output. It helps us find the exact point where a business earns no profit and no loss, known as the break even point. Okay, so basically this chart shows the three things. One is fixed cost line, the other one is total cost line, and the last one is sales line, total revenue line. Chart you can see, or you can have a look on the screen. This is the chart. So steps you can see, first you need to draw the axis. Okay, here this axis, x axis and y axis you need to draw. Plot the fixed cost line. You need to plot the fixed cost line. Like if you're having 40,000 you need to plot the fixed cost line like this. Okay, then plot the total cost line. You need to plot the total cost line. Okay, then it is plot the total revenue line. What is the revenue line? You need to plot the revenue line here. Okay, now next, what it is? Identify profit and loss area. So you will be identifying the profit and loss areas. Before you need to identify the break even point. After identifying the break even point you will be finding. If you understand the concept, it is really very easy. It is damn easy. You just need to plot correct lines, you will be getting it. Like fixed cost line, how much it is, total cost line, and total revenue line. If you know these three things you can easily do break even point man, no doubt in that. Okay, so students, if we talk about the conclusion, so break-even chart helps you visually understand where your business starts earning profit. Okay, it is one of the most useful tools for planning and controlling business activities ma. It is not like you will get loss only, you will get profit only. It helps us to understand on which line we can earn the profit. Okay, line you can see fixed cost line, it shows constant cost and it is horizontal in the behavior. Okay, advantages, shows break even point clearly, it makes cost revenue relationship easy, it helps in price and product profit planning. So all this you can write, and limitations already we have seen. So we can conclude this that a break even chart visually shows the point where a business moves from loss to profit. If a business is going in loss, how it can change its direction to the profit, we will be seeing here in the break even chart. So this was the complete explanation, I hope this will be helpful for you. If you want the notes of all the subjects and languages which are easy, simple and clear to understand, ready for quick exam preparation, you can text me on my Instagram, learn with Sahira. But there is a little payment, but definitely you will be seeing big results. Okay, all the questions whatever we have discussed in this video, all these answers with easy and simple explanations are available. You can text me on my Instagram. Bye bye.